Hi, it's Lee and welcome to Tesla Economist. It seems that we're getting inundated with good news from Tesla right now. Firstly, we hear a massive extension to the Giga Nevada facility. This will be the new semi-truck factory. I never understood how Tesla could make semi-trucks at a mass scale. The Nevada factory was simply too small and didn't have a large enough floor space to also build semi-trucks. On top of that, there simply was not enough cell supply unless the semi-truck consumed all 2170 cells from Nevada, which was a possibility, and perhaps Fremont could have moved over to LFP and Texas to 4680, but they still required a factory to build the semi-trucks. This has now been answered. In addition to that, we're seeing that Tesla are building another 100 gigawatt-hour 4680 factory on the site too. This would be enough cells to make about 100,000 semi-trucks a year. Although we're hearing that not all those cells are actually earmarked for the semi-truck, and have something else in mind too, which may be revealed in March at the annual shareholder meeting. A meeting that is becoming particularly early in the year, given the last shareholder meeting was in August last year. But we get the impression that Tesla want to announce something big. We're hearing a new product may be announced. Some people think it may be the robotaxi or a new vehicle. Others are speculating we may finally hear Master Plan Part 3. The semi-truck is going to be a great product for Tesla. It should be a lot more recession-proof than the rest of their vehicles. Although we don't know the prices yet, but due to the lower cost of the 4680 cells, the subsidies and the tax credits, they could end up making about $100,000 or so profit per vehicle sold. If Tesla are producing perhaps 50,000 a year, then that would be an additional $5 billion a year in gross profit. On top of that, it's starting to look likely that we're going to hear the next Gigafactory location may end up being in Mexico. This comes with a plethora of advantages. One obvious one being that the cost of labour is around 1/4 what it might cost in the US. Tesla want to make a lot of cars. They need to build new factories in order to increase the supply. But then obviously more demand is required to meet the additional supply. The way this is done is by reducing prices to make the cars more affordable to more consumers, obviously. However, Tesla also like to have high margins, as it is an incredibly profitable company relative to other automakers. Therefore, Tesla are continually looking for ways in order to reduce cost. The lower the cost, then the lower the prices, then the higher the demand will be to meet the additional supply. Paying workers around 1/4 of what they're paid now is going to be a massive cost saving that can be passed on to the consumer to hit these higher pockets of demand. It's rumoured that the factory may cost $10 billion, which I would imagine would likely be over many years and not all at once. Of course, $10 billion of construction in Mexico would likely go a lot further than $10 billion in Texas. So this may be one massive factory. What might we expect to be built here? Well, the South American market has been somewhat neglected by Tesla, and there's probably some potential there, although Teslas are still relatively more expensive, and these markets are generally not as affluent. In other words, I wouldn't expect another Model Y factory, especially when it's so close to the Texas Model Y factory already. Now, Tesla would benefit from the Inflation Reduction Act for anything they produce in Mexico too, as it covers the entire continent of North America. So any car made there and sold in the US will still be eligible for the tax credit, and any battery or cell produced there will be eligible for the subsidies. So it's highly likely this factory will be making products that will serve the US and Canada too. What products? Well, like I said, probably not a Y and likely not a 3, but if this is a big facility, then perhaps we might speculate that this is a vehicle that will be based on the new platform that Elon has told us about. A platform that will cost 1/2 of what it cost to build a Model 3, which most would assume would mean a cost of under $20,000. A lot of people jump to the conclusion that this may well be the $25,000 or $30,000 compact that we hear so much about, which might end up being in the low $20,000 after the tax credit, and then a further $1,500 or so in subsidies to Tesla. Anyway, any car that Tesla produce at these kinds of price points is going to have so much demand that they'll need a really big facility. And perhaps this may be the one. Although we may discover it will be the robotaxi vehicle, but whatever it is, this could be Tesla's equivalent of their Model T, which is outrageous given how successful the company already is to date. Really, can you even imagine what level of demand we might be expecting for such a car? Whether a robotaxi or compact car, Tesla will have a lot of demand and likely want to get production into the millions. Hence why such a large facility would be required. I would guess regulation is likely easier in Mexico than a lot of states in the US, and construction could begin fairly quickly. I would say the official factory announcement is likely to come out soon. And if we're lucky, we may get more information about the next vehicle on the annual shareholder meeting in March too. Elon says that they plan on making 1,000 gigawatt hours a year of cells and batteries in the US. Well, perhaps he meant North America. If Tesla are able to refine the 4680 lines, then perhaps once they have them perfected, it may not be too hard to rinse and repeat. Maybe they're just going to make 10 or 20 4680 lines each with 25 gigawatt hour a year run rate in Mexico. I mean, why not? Elon says they can get the cost of the cell down to $70 per kilowatt hour in Texas, but perhaps even lower in Mexico. Then you add to that the subsidies, and you're at around $20 or $25 a kilowatt hour per cell produced. Even if this went into energy storage, then it's almost a license to print money. I'm thoroughly confused by these EV incentives from Inflation Reduction Act. I was under the impression that these were going to give legacy autos a chance to compete with Tesla, likely with hybrids. But in reality, it looks very much like the Pro-Tesla Act. Tesla just benefit relentlessly from this, and it looks like they're taking the opportunity and doubling down where possible. However, some people think that this will eventually be capped, and if we are around $50 billion in subsidies, and perhaps the same again in tax credits, then I'm not entirely sure that the taxpayers are going to be that happy that the fact that one company benefits from the money they pay on tax. So I would guess Tesla can't rely on this entirely. However, it does give Tesla a great opportunity in order to build economies of scale and get costs down, whilst being subsidized in the meantime. Eventually, though, I'd say in all probability that these tax credits and subsidies will be reduced, but it's likely that Tesla are still going to be very profitable without them. Then we've just heard that the Model Y is now reclassified as an SUV and is eligible to receive tax credits for the price bracket of up to $80,000. Previously it was $55,000, and Tesla reduced the price of the Y down to $53,000 in order to qualify. This meant very limited options for the purchaser, or they went over the limit for the tax credit. But now they can order all the options they so wish and still receive the tax credit. However, as we've also seen, the delivery times for the Model Y in the US have been increasing too, and inventory also looks to be reducing. In other words, the $53,000 price tag for the Model Y is below the market clearing price. Therefore, I would guess that Tesla are going to raise the price of the Model Y in the US. I'd guess perhaps by another $4,000, so it's just under $50,000 for the consumer after the tax credit. This would add to margins considerably. On top of that, I think that due to these previous price drops, Giga Texas was probably running at a close to break even, at least minimal profit if there was any. A price rise like this would very likely make that factory profitable again. It really feels that at the start of this year, the good news for Tesla has been relentless. The fact demand seems to be good for Tesla in the US now the price drops have occurred and Tesla's margins are still strong means the US market can carry the company even if the other markets are not so strong. I think that's a big thing to keep an eye on. The domestic demand in China with the rising competition and the demand for Teslas in Europe due to the economies in Europe struggling more compared to the US. So I think the big thing to keep an eye on with Tesla at the moment is the domestic sales in China with the rising competition, and then the demands for Tesla in Europe due to the economies in Europe struggling more compared to the US. Either way, things are certainly looking good for Tesla so far this year. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.